Hi there, everyone, and welcome into this week's market update. Don't forget that any advice contained within this presentation is general only, so it isn't tailored to your particular circumstances. You need to decide for yourself if it's appropriate to you. Okay, so as usual, let's get started by looking at the XJO. XJO has been on an extended uptrend. You can see that it's looking very overbought at this stage. It has broken a few pretty key reversal patterns here: double bottom, inverse head and shoulders, all indicating a move back towards 7600. So from a technical standpoint, they're saying that in the next coming months we're coming back to the all-time high. That's what the technicals say. Fundamentally, I'm not sure whether we're going to be able to do it. There's a lot of factors at play. I'm still a little bit skeptical, well, very skeptical here on whether we can actually do that or not. I actually kind of feel we should be pulling back here. But look, time will tell. There's a lot of factors coming up that's going to really contribute to whether we're going to end up going up towards the all-time high or pulling back dramatically. One of the biggest things I keep coming back to, though, is the S&P 500. For me, that's the big one, right? So you can see, looking at this chart, the story is very different, okay? You don't have the reversal pattern really yet. The downtrend's still in play, and they're trading inside of a triangle pattern. Now, if this breaks higher, so if it does break higher, then to me that changes the tune of a lot of things, and targets to the upside 43, etc. But to me, if this breaks up, especially 43 breaks, then I become a lot more bullish. But for now, looking at the technicals on the US market, it's definitely a very much different story to what we're seeing on our market right now, where our market's already broken up through, gone into a bit more of a bullish run, and here we've got a small bullish run here, but the medium to long term trend is still kind of down. All right, so look, I think really anything's on the table here, guys. It's going to come down to how we receive the next run of inflation data. This whole inflation scenario may be playing out for years, not months, right? And this is the thing. This is could be a big, long drawn out process, and there's a lot playing out in the background. Now, overnight it was a bit of a bearish day for the US. We do have slightly higher futures. China's rebounded already, so I suspect the US will be up tonight, back towards that 4,000 level is very, very likely. Where to over the next probably week is going to come down to how news flow comes from China. So what we saw is a pretty quick sell down on Monday on the back of protesting over the weekend. Obviously, people starting to get a bit worried about what's happening over there and how bad COVID's going to get. Rumors sort of got sent around today suggesting that China will ease off from the COVID zero policy, or abandon it. That's the rumor mill, right? We don't have no official confirmation of this just yet. But that rallied markets today. Chinese markets closed a few percent higher, basically traded back up most of the sell down we saw Monday. Iron ore back up to monthly highs. Commodities back up. Oil that crashed yesterday afternoon come back up. So look, for me at this stage, it's looking a little bit more bullish again, to be honest, for tonight. But over the next week, the market's just going to whip around on the back of China news, right? Up until probably later in the week, where we start hearing a bit more from central banks and a bit of inflation data and that sort of thing. But RBA is set to lift rates next week, guys. So just keep an eye on that. 0.25% is very, very likely on Tuesday. I doubt they'll go more than that, and I doubt very much that they'll go less than that also. But what it all comes back down to, guys, is obviously interest rates in the US and what will CPI come in at December. Well, we're going to get a little hint of that this week, Friday morning, with the PCE data. So that's price index data in the US. That will give us some insight on what to expect out of the December CPI reading. It's critical December, guys, because around 12th or 13th of December, you're going to see the CPI reading. A few days later, you're going to see the Fed meeting, right? They're likely to go 0.5% regardless of what that CPI reading comes out like. They have already signaled that they're going to come in lower, right? They're not going to go the full 75 points as they have done for most of this year, but half a percentage point is likely. Okay, 50 basis points is very, very likely. 25 basis points, I doubt. Like, for them to go 25 basis points, it'll have to be a very low CPI rating. I doubt that's going to be the situation here. That is for sure. So CPI is going to be critical coming into December. Now, for the rest of this week, things were pretty quiet. Other than two things: Thursday morning, early hours, you'll hear from Jay Powell, Federal Reserve Chairman. He can move markets, right? He'll likely come out with a slightly hawkish note. I don't think he's going to say anything different than what he's been saying recently. Has the markets priced him in already? I don't know. The markets are overbought. Possibility it could fall on the back of that. Just know that the risk is there and just watch for the market reaction to that risk to give you a clue on what's likely to come next. And then, as I said before, straight after that, Friday morning, you've got the PCE data. From there, there's not really much from the US. Like next week's pretty quiet. Okay. So I suspect once we wash out the Fed Reserve chairman and we wash out this PCE data, we'll probably just hang sideways coming into the critical week of the middle of December. As I said, is the big one, okay? And that's your actual Fed meeting with our lift rates and CPI, where we're going to get a sense of where things are at. Otherwise, guys, look, the backdrop has been positive for the last 2 or 3 weeks. There's no denying that. Okay, I'm not sure how much longer this can last. This could be one of those sort of rallies where we'll just keep grinding and grinding and grinding until something comes out to send it lower, and that could be a slightly higher inflation read, or a slightly more hawkish something, or a lower GDP, or something indicating the US is going for a hard landing. It could be anything, right? It could be something out of China. It could be something out of Russia, Ukraine. But markets can stay overbought for a very long period of time. So I'm not going to sit here and pretend that I know where the top of this move is, right? It could be another 200-300 points on the XJO. It could be the all-time high, right? Value is definitely seeing a much larger bid than growth at the moment. We're a value-based market. We could continue to grind higher, right? It's a possibility. So not trying to pick the top, but being very, very wary that a pullback is going to come on the back of some big piece of news at some point. So really kind of cautiously trading sideways to bullish really is the main view for the second. And I say cautiously because I'm trying to be out of the market around big announcements, okay, especially the CPI and Fed announcement, middle of December. I will be definitely on the sidelines for that one, guys, waiting for a reaction and getting back in. Probably not much else to talk about right now. It's actually pretty quiet and slow out there. China's the only thing that's creating volatility so far this week. And the next bit of volatility may come from, as I said before, multiple times, giving you a nice big warning. Jerome Powell talking Thursday morning, and the PCE data index information Friday morning, the two big ones for this week. Outside of that, things will probably be pretty quiet. All right, well, thanks for listening in. It's pretty short at the moment because there's not a lot to talk about. Markets are stuck sideways, waiting for a break one way or the other. Once we see that break, then we might get a bit more of a directional trading strategies back into play. But right now, it's mainly deploying sideways strategies, guys, okay, on this market right now, and it's working quite well. All right, thanks for listening in. Take care, and bye for now.